it was a pretty crazy week. All things said and done, we had a big FOMC meeting, which was highly interesting. And then, of course, we had everything going on in the Middle East, which caused quite a bit of volatility across a lot of different assets. We have indices up here today. Take a look at the NASDAQ charging back higher here. And just as we've been saying on the show here, a stone's throw away from those all-time highs. NASDAQ looks strong. S&P 500 looks strong. The Dow Jones also bouncing back nicely. And the Russell looks great. I'm still long the Russell. This is a trade that I'm personally in. And continuing to hold on to this one. We'll see if we can get a push across the indices through their recent highs. Now, if you're looking at the NASDAQ, this is going to look slightly different. We're pretty close to, sort of that breakaway move. But I do think that the path of least resistance, as I've been talking about on this show recently here, has been and still is, in my view, a push for those fresh all-time highs. I do think that is likely coming down the pipeline. So yeah, we will see what comes next. A couple reasons behind that. Why do I think that the indices have the potential to put in those fresh all-time highs? Well, here's a couple reasons. First one is just pure momentum, right? This market clearly wants to push higher. I had a really interesting conversation that I want to tell you guys about yesterday. I went to a dinner event yesterday. I had a conversation with a gentleman there, a friend of mine there, and we talked a little bit about what all kind of took place. And I love doing this. I go to social gatherings and events and things like that, and it's always interesting for me to just get a context of like people who are not, kind of insane like me, who stare at this stuff 24/7, just to see what their take was on this. And what I can tell you is that who did really well in this sell-off? It might surprise you. It was actually retail traders. A lot of retail traders did phenomenally well in this crazy sell-off. I want to talk a little bit more about that in just a bit, but before I get into that, why do I think the indices have more room to push higher? Now, by the way, not all retail traders did well in this, but a lot of traders, a lot of everyday people actually did really well in this market sell-off. So big push, right? Why do I think that could happen? Well, this morning we got a announcement from Fed Waller, who is a notable, part of the Fed there, and he actually thinks that July rate cuts could be in order. So you have Powell, who has been sort of very hawkish here recently, but the consensus is not, to be uber hawkish and no rate cuts. There is a rising group of Fed officials and even just commentators across the financial lexicon, if you will, that think that rate cuts are more and more appropriate. We've talked about this a lot. I spoke about this at length yesterday, just about how I think that you're seeing some economic data here that really suggests rate cuts are the appropriate next move from the Federal Reserve. Take a look at our economic surprise meter. When we look across the currencies, you can see that the US and Australia are getting some very low scores. Now, what this means is that the US, on most of its economic prints, has some weakening, some slowdown in the economy occurring right now. Now, we could extrapolate that further, and we could go down into the weeds for a second. But before I do, let me just draw some cool attention. If you have the Edge Finder, you might be excited to see this new feature here. We've been talking about it on the show. I've been so adamantly excited to have this ready to go. But we now have the average economic surprise score down here. What does that mean? Long story short, this gauge right here takes into consideration the 8 major economies, and it generates an average of how strong or weak each one, or the collective, if you will, is performing. Now, one thing that's to note here is that this is actually equally weighted, right? So we're not going to weight US, even though the US economy is very important. These are actually equally weighted. So Japan has the same weighting as Australia, has the same weighting as the US, is the same, and they're all contributing to our average economic surprise meter. Now, why would this be useful? Who is this useful to the most. You ready? If you trade gold, this was built specifically for you. Now, it's useful across a long list of things, but why is this so specifically useful to gold traders? I'll tell you why. Because if this average reading here is stronger, that would suggest a risk-on type of environment, or just in general, it would suggest the economies of the world look pretty good. Whereas if this thing is lower, the economies of the world are collectively looking a little bit soft.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
With that in mind, gold is getting a bullish rating. And why do I like gold in terms of a possible buy? Well, let's break it down. When we see gold getting a plus 10 score, what is that all about? Well, the commitment of traders data plays a big role here. Institutional money is super bullish on gold. Retail money seems a little neutral on gold. Seasonality suggests upside for gold during this time, and trend. So these are non-economic data points, right? So this is our non-economic stuff, and then we have all the economic data down here. Economic data slightly suggests bullishness for gold, but this is really where we're getting a lot of our scoring points. So so what we've got here is we've got a strong reading on gold. For me, what this would mean, and I get this question all the time, I have another video coming out on this. How do I actually trade with the edge finder? Well, I'll show you in a high level. So we have a bullish rating on edge finder, right? So the way I use it personally is I use the daily chart. Some traders use the 1 hour, the 15-minute. Time frame is not specific. The edge finder is not built for a specific time frame. But if I can get a pullback down to this 3,300 area of support, this to me looks like an opportunity to start getting in long on gold. I'd put a stop below structure. So if this thing comes down into this area, I'm going to probably get long around this area as long as the edge finder still has that score with a stop loss below this 3250 level. So that is a trade idea that I have currently. I'd like to get long gold if we do see some further pullback today. I do think that the momentum here for gold this year still looks good. We've just moved sideways for a couple months, and I actually think that that's not necessarily bullish or bearish. In fact, I think that if you're consolidating near highs, that's actually a bullish thing. As long as the fundamentals and the economic score still, or the edge finder overall score still suggests more upside, I'll look for a technical entry, put a stop on the trade, and manage risk accordingly. So I like gold to the upside, and am watching this one personally. I'm still long the Russell. Things have been going really well. I've been surviving. My trailing stop did not get hit. And so now we've got stocks making a move higher here today. And I do think, as I mentioned at the top of this show, that I think indices have more upside to go. I think that we should see a continued push beyond this level. And actually for the Russell, I do think it's possible that we could get, all-time highs being hit in the coming year or so for the Russell. So we'll see. VIX is down 13% here today. Big drop off following, everything that occurred yesterday with the FOMC press conference on Wednesday. We saw on Thursday. You're now seeing a little bit of hopefulness in terms of what's happening in the Middle East, but I wouldn't get too ahead of ourselves there either, because oil prices are still suggesting, things are highly uneasy there. So we'll see how things develop on that side. So we'll see. Silver also looks good if we can get a pullback. I personally like the idea of a 3450 retest on silver being an area where I'm probably looking to get long on this one. I believe this is also a very bullish setup within the edge finder. Let me just pull up silver. Yep, so we're getting a +9 on silver. So this would also be a strong setup for me. If we can get a pullback to the 50% retracement, that is a previous all-time high, key level of past resistance that I think could turn support. But what I say often on the show, I don't read too far into technical analysis. I keep it really, really simple. And I mostly use technical analysis not as a predictive tool, but as a risk management tool. So, what I mean by that is that, I don't actually think that there is, and there are people who have differing thoughts on this. Obviously, with everything in trading, there are differing thoughts. But my opinion is that if you have a price level like this 50% retracement happen, and we set this up, I don't think that this chart is, massively predicting. It's not telling me, the price action's not predicting that it's going to go skyrocketing higher. If anything, it would be the fundamentals, the flow of markets, right? The true reasons markets go up or down are based on fundamental analysis. So the fundamentals are what actually guide direction, why I think silver could continue to push higher. Now, do I know that silver is going to push higher? Nope. But I don't have to. Trading, as I always say, is educated guesswork. It is not certainties. Recently we had some inflation statistics. We heard from the Federal Reserve on Wednesday. We've had geopolitical stuff flaring up in the Middle East. What are your thoughts on these markets right now?
Yeah, I'm quite surprised because they seems to be quite strong. I was expecting some serious sell-off, but I think maybe it's because the US is not really involved in the conflicts at the moment, or let's say until now. But beside the geopolitics and stuff, on the economic events, I think things are going very smooth. We saw retail sales are going lower, which means inflation is going down. I think we're gonna have maybe 2 rate cuts coming this year, which is gonna be good, and that obviously it's a good thing for the stock market. Unfortunately, with the conflicts, oil prices are just skyrocketing. That might have an effect on the inflation, which is not really good because we've been on this downtrend for quite some time now. But yeah, I think for now, so far so good. So far so good.
So in terms of where indices are, right? When we take a look at the S&P 500, you mentioned oil prices rising could cause some problems on the inflation side. But at the same time, we've had relatively strong earnings from U.S. major companies, and things look optimistic in terms of the inflation story looking backwards. Do you think it's more likely that we pause on the bullishness and see some downside in the coming month or so, or do you think we are poised for some fresh highs soon?
From my side, I think we're still gonna have some serious room to the upside. But the thing is, if maybe US get involved between Iran and Israel, I think that is not going to be good because that will actually lead to investors to think about safe haven. And the safe haven that we have is going to be gold, which is going to push very high. Maybe other currency pairs like CHF and maybe the other ones. On that, I think the market, if the US get involved directly, that is not going to be good. Even for the dollar, I think that is not going to be good. But at the moment, because they're just talking, it's just communication from social medias, it's not really that much. But if maybe Trump say, no, we're going to get involved, that I think is going to crash. Not crashing, but I think the market can sell off.
Interesting. So do you think, I guess here's another question. So you mentioned gold potentially being a beneficiary to the geopolitical conflict and also maybe that cooling inflation story you mentioned as well. I like the upside for gold personally, if we can get some pullbacks. Do you think that, I guess if you had to choose, do you think there's more upside in the coming month for the NASDAQ, or would you choose gold? If you had to buy one over the other, which one would you choose, do you think?
I think I will go with NASDAQ because at the moment, gold is going up, or we can say it's influenced by politics, or let's say tensions. But beside that, no one will feel like holding gold when there are other options which can grow very quick, or let's say growth stocks. So for now, yes, we can say gold can still go actually very high if maybe you are someone, or let's say investors from those countries which are involved in those tensions. Obviously, if we check their stock market now, I don't think they are performing very well. So which means there will be an alternative. You have to have alternative very quick. So if you are a neighboring country around those countries which are like fighting, all those investors, obviously, their stock market are not performing very well. So which means a safe haven is going to be gold or the other ones. So one way or another, I think gold can actually push up as long as the tensions keeps going higher or continues. I think we are still going to see some serious push from gold. But if they reach a quick conclusion and say, you know what, we reached the truce 1 2 3 1 2 3, I think that will make gold to sell off, even if maybe it's not going to be that aggressive, but we might see some sell-offs here and there because we still have Russia and Ukraine still going on and stuff like that. So I think, but the one that we have now, it's mostly affecting oil, but still, even gold, it's enjoying that.
Yeah, definitely a winner here recently, in all of the uncertainty that 2025 has brought. I mean, just as a reminder, indices are just barely on the positive for the year, and meanwhile, you take a look at gold in 2025 has been a serious winner, right? If you're talking about gold prices up 28% from the beginning of the year, it's been a massive winner here. The other one that's interesting to me is silver. Kenzo, do you ever trade silver? It's had a huge breakout here. What are your thoughts on this one?
Yeah, I did not really check it that much, but I saw most of the metals were pushing a little bit higher. Those countries which are involved in the wars and stuff like that, they really need those materials and stuff like that to produce whatever they want to produce. So plus they are quite safe during times like this. Commodities are very good to invest in. So yeah, unfortunately, I did not really check that. I was focused on gold and other indices.
Sure. Yeah, and then another one that you mentioned, I want to get your thoughts on this one. This one's been the dollar, right? So the dollar here recently has been, in 2025, to gold's benefit. The dollar has really struggled in 2025. We've seen a pretty dramatic, from this recent high that was January 13th. The dollar index is sitting at a loss of about 10.3% year to date. It's a pretty big move down, and we've seen a consistent kind of lower high, lower low pattern in the dollar index. I'm wondering what your thoughts are on the dollar here. What's making this so bearish, and do you think that the dollar bearishness trend, with rate cuts coming and cooling economic data, do you think it can continue to push lower? Which obviously would assist with the gold rally. What are your thoughts on this?
Yeah, I think this is a little bit different from gold. I think since Trump was getting into office, he's been trying to say the dollar is quite stronger, it needs to go down, Powell needs to cut the rates. I think it's influenced, the influence comes from those politicians, and which at the same time, I think it's a good thing because it was very high. It was not really very affordable, which means the rates were actually going up. I think this is a nice or a good sign for us to say we expect some rate cuts, because at least, I don't know if you said it's 10% from the top there going down. I think it's 8 or 10%. That is actually a very big move, especially within 6 months. So I think it's a good time maybe for Powell to cut the rate. That it actually puts a US economy in a very good shape, actually. Unfortunately, we have this stuff going on beside that. But at the moment, I think this gives me confidence to say, yeah, I can actually buy stocks without looking back. I'm expecting some rate cuts from what we see, because before actually Powell said, oh, the dollar is higher, 1 2 3 1. Now it's lower. So which means there is a room to cut those rates, because there won't be any sharp move, or because already the market or the dollar at least lost some strength, and that is actually good for the rates.
Yeah, and I want to add one thing to the concept with the dollar index. You mentioned, obviously we have the geopolitical uncertainties happening in the Middle East right now. We've seen on a very small scale the dollar catch a slight bid in response to some of that, due to the risk off kind of bias, where we do see the dollar sort of maintain some strength. We've seen, in initial onsets of like announcements of things happening, we've seen a drop in the euro dollar, drop in the pound dollar, drop in the Australian dollar, so signaling dollar
Mm,
strength. Here's my personal opinion on it. If you do get more spikes in the dollar due to that, I would actually personally take that as an opportunity to look for short opportunities uh, against that, right? So if for example we get um, things are uncertain for a little bit, worrisome in the Middle East, and people kind of flood into the dollar as a safe haven, I would take that as an opportunity to probably get short the dollar index. Specifically, some currency pairs that I like would probably be
mm,
shorting a rally in the dollar CAD, which we're starting to see. So if we get a bigger push to the upside on dollar CAD, that may be an area that I like. A pullback on the euro dollar for longs. Um, and I think that that's probably it. You mentioned the Swiss franc? Do you have any Swiss franc trades on, or trades that you're considering?
Currently, no, but the market was still on a downtrend for quite some time now. So I was just waiting for another continuation because I think we had a support very close. So if that is broken, I will continue selling because at the moment things are not really looking good. You see that support? So if the
Mm-hmm.
market breaks that, I will continue selling. Or if maybe the market goes a little bit higher to that resistance, it's where I will look for another sell around those levels. But on the rates cards, I don't think, if maybe there were no these tensions, I think this month was a very good time to cut the rates. But most likely they won't cut the rates if there are some instability.
Mm.
So they will just postpone that. But I think we're ready to see those rates cuts. So I think I'm confident that the market will still continue going lower.
We have some pretty tight price action this morning, up a little bit, down a little bit. Watching some key levels right around that 6,000 handle. We have some big gamma levels this morning, just stuck right around that 6,000 handle. Going out to, I mentioned this 5,900, 5,905 level. That is the big JP Morgan support zone that I do think price can get to by the end of the month, especially if you break this 5,960 low, which hasn't happened yet, but we'll obviously watching price, today and into next week. I do have a trade on this morning that's centered, looking to see if I can just pull a little bit more time decay. And this is the low from last Friday. Do we, hold? This is the gap fill, and so far we held it. I did want to take a look at a price play today on Qs or SPY. I talked about this in one of my earlier sessions. Look, on the weekly time frame, we have two pretty big indecision candles. So let's go. I mean, we don't see a lot of indecision without volatility quickly coming later. So example being just in this last little bit, like those two candles followed by big volatility. There's two candles here followed by big volatility. A couple candles here followed by big volatility. Makes sense. So I mean, this last like 1, 2, 3, 4, 5 weeks of price really hasn't done a lot. We haven't seen price do a whole lot in the market. That's okay. Like, we're not necessarily turning lower, despite all the potential concerns out there. The market just doesn't seem to care that much until price suggests that it does. So just watching my levels pretty closely this morning. But this is coming into the day. I thought 6,000 would be an interesting spot to show some resistance, and it could also just show like this big magnet for the day where it just holds right around that 6,000 handle. So we'll see. Currency strength wise, what happened overnight? So we had FOMC Wednesday, markets, it was just currencies and futures yesterday. Things are pretty quiet today. Euro on top, pound on top, dollar catching a little bit of a bid, Aussie dropping, Swiss, New Zealand, yen, CAD, all to the downside. So euro up a little bit, dollar up slightly, pound up slightly. We had the Bank of England hold rates this week. That was on Thursday. So Bank of England held rates at 4.25. Swiss National Bank cut rates to 0%. I do wonder if their next stop is maybe going into negative interest rates. I don't know if they would. I don't know if that's necessary. I think that was a pretty big extreme, post COVID. But you never know. You never know. Negative interest rates, maybe. Bank of Japan still holding at 0.5%. News today. Pounded retail sales, CAD retail sales, low impact news, Philly Fed down slightly. Markets just don't seem to give a funyun. We're pretty sideways. So, all right, I want to price out something here on the Qs. So I'm just going to look at some levels. I think if we get to Qs, maybe get to highs around 541, that's $11, or get down to like 501. That's a lot. That's like $20 downside, maybe $10 upside. Rise in the day, I weekly gain. Really? Well, you're seeing that right here. This is where the week started. Right where my mouse is. This is the week starting. We are very close to turning this thing negative for the week. If we don't hold around 59, 80 to 59.75. Take a look at levels again. There is some pretty big support around the 5,900 handle intraday. If we are going to have a drop, but I'm curious if we end up getting stuck right around that 6,000 handle. All right, let's go a little top down. Do some extra analysis. I'm just going to pull up a blank chart here. There we go. So just watching this area really carefully. I mean, are we going to break the structure, fall back down to some correctional areas? Are we going to try to wait or try to pop to the upside? Something like this, like just a little hesitation, a little bit more of a push and a melt up, trying to get back to all-time highs. July is a pretty bullish month. Maybe we get through this next week with maybe a pullback, and then we start to bounce up into the end of the month, into July being another bullish month for the market. Gold ripping. Well, we'll see. We'll see what Carr's definition of ripping is. I wouldn't call that ripping. Gold's actually flat on the day, unless you're looking at a very small time frame. I said this on the some of the sessions this week. I mean, to me, this is a support line. I think we're bouncing off like the 21 moving averages. So if I go gold here, take a look. Is that blank? Yes. Let me just add in a couple of indicators here. So EMA, let me add a couple more EMAs on here. 1, 2, 3. So I have the 200. Let's go 21. And we'll go 50. And we will go 100. Turn this 200 into a 144. There. So gold seems to be just holding this 21 moving average. So, I mean, pretty precise. Like hit the 21, bouncing up a little bit. That's such a tiny little move on the daily time frame, but intraday seems pretty decent. Tick wise, that's up a little bit. I mean, if you got 33.43 to 33.67, it's not bad. Up around 25 points or so. That can pay well. All right, holding that low, holding the gap fill. See if we get back to center, back around the 6,000. I think the 6,000 handle is just going to be a big one today. One trade I might look at right now, SPX, today's expiration, maybe just 6,000. 59.05, there. I mean, I risk $100 to make 400 if I'm in between these levels. So between 59.95, 60 or 66.005. If it's in there for the entire day, I can keep some credit. Now, If I take the trade early, I don't want to hold it to expiration, then I try to pull this trade in for about $14 and some change credit. And if I see it trading for, you know, $13.20, maybe $12.20, something like that. Not a bad trade. But intraday stuff can be a little tricky. All right, let's do a little bit more top down. So moving average, that's gold. I still think gold is going to be a bit of a grind. So if it grinds up to the highs, watch for that structure. You know, maybe gold heads lower. I still think a correction is due. I like to see the XAU spot price hit the 200 moving average, which I think that's the 144. Yep, I'll add one more exponential in here. So the 200. There. Make this one a little bit larger. Okay, so that's the moving average I think we get to before we end up making like significantly higher highs. I thought that gold either this year is going to go, you know, just completely exponential melt up mode and then we crash harder, or because we have such a long bar count that at best we're just going to keep slowly grinding, and then maybe have a pullback, find lows again, right? Let these moving averages catch up a little bit, have a good chance to buy support. Target 1 is getting back to the highs, and then target 2 is as high as you want to go. We can measure this out, but I mean, a round number at 4,000 would be a pretty nice target on gold, and then some. I mean, if I don't know, I'm curious. Moving forward, the next couple of years of gold is really seen as just an awesome asset, and we get a lot of appreciation on it. That's very possible.
If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses and much more.